Hi everyone, wild week, so let's dive in. You've got 10-year yields lower by 26 basis points and cracking below that psychological 4%. Stocks, on the other hand, took a beating, falling by 9% over the week. So, a quick overview of the week. You can see that all the action was packed into the second half. Interesting to note is that yields pretty much declined steadily over the week each day. You can see drops each day over the week, but for equities, it was a little bit of a different story. You've got some rallies on Monday and Tuesday, and then mostly declines Wednesday, Thursday, and Friday. So, highlight of the week is that the market mostly knew there was a big tariff announcement coming on Wednesday, so it makes sense that you didn't really get anything wild on Monday and Tuesday. But still, as an appetizer, we can quickly mention something quick on Tuesday. So, the econ calendar had two downbeat data prints, and you have yields reacting as expected by rallying. So as a reminder, anytime you get something negative, safe assets like treasuries tend to do well in these kinds of situations. So data point number one is PMI data, and that's Purchasing Manager Index. So this is a Outlook survey kind of data release. And you can see from the headlines there, it wasn't very good. There's a stagflation flavor to it. You've got a combo of slowing manufacturing activity and higher price uncertainty as a takeaway. And now data point number two is the JOLTS or job opening survey. And over here, not too great as well. You can see from the headlines there, fewer job openings, slowing labor market. So that's the takeaway from data point number two. All right, now Wednesday is the interesting one, kind of the build up into the storm. We can break it down into three parts here. So let's look at part one. You're seeing a gentle, controlled risk off as yields and stocks are moving lower in the Tokyo and London hours, driven by negative China headlines. And then passing over to part two, you have some positive data in the New York session. You can see headlines there about jobs and factory orders. So you're seeing a little bit of a U-turn in yields and stocks at the start of the New York session. And now as we approach the end of the day, we can jump into part three. And this is President Trump's big announcement, the big risk-off drop as he toughens up on tariff language. And this is what he's been calling, quote-unquote, Liberation Day. And so during this address, he started showing a chart with how much tariffs other countries are charging the US in his wording. And I have a quick snapshot of the chart that he was showing right there in the lower right section of the screen. I cut off and just showed kind of the first top 10 countries there. So that's a quick snapshot of the numbers and how Trump's message is saying this is how much other countries are charging the US and this is what we're going to retaliate and charge on a reciprocal basis. Now, quick thing to note here, don't want to bore you with details, but a lot of economists have pointed out that the number in that chart isn't really tariffs per se, but it's more so a measure of trade deficit. So what Trump is calling tariffs is, in his world, tariffs, but a lot of what the economists are saying is just a different measure. So it's a little bit misleading there. Nevertheless, takeaway is you can see the market reacting very negatively with that steep drop at the end of the Wednesday heading into Thursday. And so now Thursday is Liberation Day aftermath. You can see yields reacted and priced in all the news pretty early, and they were done early in the day, almost right after the announcement. But equities kind of picked up the risk-off steam really towards the end of the session, heading into the close on Thursday at late New York hours. And now moving on to Friday, we have more aftermath of Liberation Day, day two after Liberation Day announcement. So Friday was outright fear in equity markets, easily having the sharpest drop of the day over the week, and pretty much continuing that momentum and hitting the lowest point right towards the end of the day. Again, slight disconnect between yields and stocks. We did have an important data release here, and that was the jobs report. And probably an explanation for why disconnect between yields and stocks is that the monthly jobs report actually came out better than expected. So despite fear gripping the equity markets falling throughout the New York hours, yields actually move upwards throughout the New York session. So I guess the takeaway you can say is that yields kind of reacted more to economic data, while equities were unfazed by the economic data and continued to be hammered by the tariff narrative. So that's the week in a nutshell. Thanks for tuning in and see you next time.